Welcome to TradeTheMBI.com. This is John. This report is for the 16th of August, and well, we got the little bit of extra weakness that we were kind of anticipating here as we dipped all the way to, well, right about the 61% line, which we were talking about on the breaks of the various supports. We saw that the ABM yellow had been a little bit of resistance here in the near term with the weak readings, and we were waiting for a decision here on the steel meets orange. To determine who is going to have the power. In this particular case, you get green dipping below that negative 20 point, which theoretically should cause a little bit of a bounce, which we're actually seeing in the pre-market right here. And the justification of that, of course, is that some kind of safety has been established within emerging markets as well, and even China supposedly is sending representatives to talk about trade. Much to do about nothing, but the increased volatility is exactly what we were talking about wanting to see, and that came in pretty much as expected. We're still below the red line, but the reality is holding all the key points. We closed above, in this particular case, the ABM green, and that provided the support. That always becomes an important one. Breaking below that certainly creates an exacerbated sell, and then clearly, at the end of the day, there was plenty of buying that brought it right back up to it. And then, of course, once you get back to the key threshold, it encourages additional buying. And again, we've talked about NASDAQ, not as in bad a shape as the S&P as far as DOC readings. Shakeout's just as bad. In this particular case, though, we hadn't got the steel crossing above orange either. So both of these have all been short-term buyer holds for the most part, and it's been significant enough to completely reset the market in the sense that any new influx of resources can create completely new highs. So take that one and think about it for a minute. The pressure had been definitely with the EU setup and some of the threats that were taking place from Italy and that. But this has just put it back into the range that we had expected all along. The fact that the U.S. economy is doing well enough that this would normally create a much deeper dip in S&P value hasn't really produced that, which is an indication of the strength of the U.S. economy. And so that's something worth noting. Of course, when you have a market dip like that, you always get a flight to safety, and that's treasuries. And this becomes the real battle for the market going forward, is going to be how much of a draw of new liquidity goes to treasuries versus back into the market. And as I've been talking about for some time now, the trade in oil has become the new gold configuration. Of course, in a down move like that, people searching for resources obviously sell whatever commodity issues they've got in order to keep themselves going in the right direction. And so that was a little bit of a sell, but we're still in an elevated range. We're at the bottom side of it, and we've been in this decaying line here without a reset of orange in that. So probably even going to continue. We may even test the lower side of it here, which is helpful. Anything that eases off gas prices certainly makes for less inflationary pressure. And certainly here we have the interesting, there it is, that gold. We've been talking about this being in a sell for some time now with that horrible shakeout readings set up in here, and the inability to get that DOC red back up above the plus 13.5. It's always problematic in that case. Every single time we see it. So let's talk about the day. That was very fun and exciting as we peaked out going, well, all the way up here into the, what was that, 28, 43, 44 range. And then we started to get that little bit of broader selling with not much algo. The algo activity actually happened earlier. We ended up to shrink it a little bit more. To see it. This is where the first sell signals started to come in, and the final one right over here. And then it's just a matter of waiting, because there's nothing you can do. Sometimes when it's a broad short, and this was a pretty decent short when you think about how many bars that is and how much cumulative selling took place within this range before the dam was let out. And all we did was fill back in just a ton of positive extremes that were listed there, and we went over this in the previous video from the other day, and we started making white candles and getting yellow warning ones, well, geez, even as we were like getting relative buy signals within this, staying below that 23%, and boom, that created a new cascade lower, which brought it in a whole new range. We got another white set of candles. Like I said again, though, I'm going to start to change these to orange. So you have an orange-blue combo, and that way we're not going to confuse it with buy signals that you would normally get from like the DOC paint, and that when this gets merged into it all. And then we got gold below the 23%. Wow, yeah, that produced new lows. And then we got the signal was right around here, which was on much higher shakeout, and I warned that we would potentially see a pop going into this range at or about this point, and that's exactly what happened. We got back up to right around 50%, but caved again, and then that created a whole new reset. But even at the peak of it, you know, those blue dots, the cyan ones, usually create that little bit of sell pressure, and by the time the second one came in here at the highs, that produced a nice decline. And in this case, the decline comes in, fills in all those white candles. If I scroll that back a little bit, we can see a little more clearly as we get right back into those ranges. And so that just takes care of that fill back, and at that particular point, you ended up with nice reset above 13.5. That led to a bonus. Once you got above the 50, yes, we produced some positive extremes. They came back, filled those in, produced a whole new set of highs, filled them in, but then we got gold at the highs. And until you get the conglomerate of dots, you're not going to get much of a retrace. And in this particular case, it wasn't a whole lot to go down to. It was, oops, I didn't mean to move that one. That was a white candle from before. Oh well, I have snap mode on, so it goes directly to where the snap is. Right about there. And filled it in right here before this latest pre-market bounce, but of course we get new positive extremes there. So again, we'll probably be revisiting lows right around here, which are in the 30 range from where we're at in the 36. So it's a decent range, just a matter of looking for this completion of a DOC spread. Just now getting orange crossing above steel. Cyan pops up a little bit there. That could be the beginning of the end of that mini run, in that where I would look for positive extreme retraces within the setup here. I can expand that and be easier to see it. There we go. Just like that. Bingo, and then easy enough with all of these. It's always tougher when you're up here and you have ABMs all. In fact, we may even get green up towards the 61, well, it's past the 61 up to 76% here. And then they all conglomerate, and so on the retrace usually becomes resistance points. When they separate, where you'll get yellow breaking out ahead of it, usually you get the mean reversion at that particular point. But all in all, enough to drive shorts and longs crazy who don't have proper signals, but well within the broader range. I mean, you're seeing a 30 on that reading here on Morganacci right there. Beautiful for our expectation of greater volatility. And it's just a matter of playing with those signals. So all in all, I love it, and just keep going with exactly what is, and that's just following those readings. So easy enough. As always, though, I'll put up charts as they're relevant. Trade well.